Hi, good afternoon, everyone. Thank you so much for tuning in. And we're really excited to talk to you with some of the amazing VCs in our network here. We've got Deepika from Let's Ventures. We've got Naganand from Idea Spring Capital. We've got Sri Krishna from Unitas Ventures, Ravi from Waterbridge Ventures, and Vineet from Orios Ventures Partners. It's an exciting time in today's day and age with the new pandemic causing a lot of chaos in all of our lives. And I'd really like to invite each and every panel member here, maybe starting off with Deepika, to give us like a literally helicopter view of what you guys do at Let's Ventures. You're on mute, sorry, Deepika. Awesome.
Thanks, AJ. So Let's Venture is a technology-based platform for startup investing. We have Let's Venture and the Let's Venture Plus. Let's Venture that focuses on the early stage platform. We have more than 6,000 investors and closed more than 225 rounds for these companies. And we've also recently launched the Let's Venture Plus that focuses on secondary transactions and transactions that have a higher valuation in the ecosystem.
Awesome. That's great to hear. And 225 transactions. Congratulations. That's brilliant. Absolutely brilliant. I think you probably get a new lead bucket right after this session. So be ready for it.
Looking
Naganand,
forward.
Naganand, I would really love to hear a little bit more about Idea Spring Capital as well.
Sure. So Idea Spring is an early stage seed fund. We focus only on product innovation, aka B2B or B2C. So we don't do any B2C. Our thesis is that India is capable of building products to the world and selling to the world. And that's what we are very excited to support. So we come in at the seed stage, give about 3 to 5 crores Indian rupees, and also co-invest in the next stage. We don't lead the next stage, but we will look for investors who would be as excited as us in taking these companies to the next level. And we have done about 15 investments now, 16th one underway. So that's what we have done in Fund 1. And looking forward to scaling these companies going forward.
Excellent, excellent. Thank you so much. And I love how crisp you were in terms of explaining the ticket sizes and the vision as well going forward. I'd like to invite Sri Krishna from Unitas Ventures to also tell us a little bit about your entity.
Sure. Thanks, AJ, and thanks Your Story. Great to be here at TechSparks, and fantastic to see all the energy despite all of it being online this year. I'm with Unitas Ventures. We are an early stage seed and early stage impact investing fund. We invest not just for financial returns, but also for scaled impact. We're currently investing from our second fund. It's a 200 crore fund. We've made 15 investments already. Typical check sizes for us are 3.5 crore going up to maybe 7-8 crore or so. So half a million to $1 million. We come in fairly early, going all the way up to pre-series A. And then we stay invested over at least 1 or 2 rounds, similar to Idea Spring. Won't lead, but would like to stay invested in at least 2 rounds from when we invest. Sectors that we focus on quite a bit now are fintech, job tech, and healthcare, although we've sort of been sector agnostic when we got going. And our specialty is investing into businesses that serve the large number of India's masses. So what people term as the low and middle income population. So that's really what we do.
Awesome. Thank you so much. It's really exciting to see that you've got a massive fund behind you as well. And I'm sure there are a lot of opportunities in this new pandemic, especially in the areas you're talking about. And I'll definitely circle back. I have a few really targeted questions to some of your specific areas. So that's great. Okay. Ravi, over to you now. Would love to know more about Waterbridge Ventures as well.
Hey, thanks. Hi, everyone. We are an early stage venture capital firm. We invest across 2 funds. Our first fund we launched in June of 2016. Our thesis is seed to Series A. Invest anywhere from $500,000 to $1.5 million first check, and we reserve anywhere from 5 to 7x in terms of follow-on capital in our portfolio companies. For us, I think a high value add approach is we go deep in those investments. We are sector agnostic, but of course we have a few favorite sectors. Otherwise, we don't do offline businesses. So yeah, I think we're now investing out of our second fund. I think till date we have done about 24, 25 investments over the last couple of months.
Awesome, that's great. Thank you so much. Vineet, over to you for Orios Ventures Partners.
Hey guys, thank you very much for Your Story for having me represent Orios over here. My name is Vineet Hansali. Orios is an early stage fund. We do seed through pre-A investments. like a lot of my other good friends over here. Which means if there are any founders watching, you've already got maybe the top 4 funds in India in one Zoom call, right? So you're sort of kind of covered. Your story's done a good job over there. Having said that, Aurais is very specifically a consumer fund. It comes from our history and our background. Rehan was the first investor in Ola and all of the others, and we continue to stick to that ethos. The only time we make SaaS investments is if it is SaaS for, let's say, Indian SMEs, right? Like SaaS for Kirana or SaaS for extremely tiny businesses, because the volume is so high, you can treat it as a consumer market, right? It's just, that's why. Having said that, Aurais has been working very hard on the Misfits program. It is something very dear to us. And if you haven't checked it out, do visit auraisvp.com/misfits. I run the program, which is why I'm particularly passionate about it. It lets me be an entrepreneur while still at Aurais. So thank you.
Vineet, the passion definitely shows, and I love the energy being shared on screen as well. They say that this pandemic has definitely made us go a lot further than our actual physical presence, but you're bringing it here, and a lot of you guys as well are as well. So I just wanted to maybe give you guys a little bit of a nutshell of what the Tech Hub is about as well, because I'm sure you guys haven't heard much about us over the past couple of months, but the UK India Tech Hub has pretty much been set up to help entrepreneurs scale up into fundamental businesses and hopefully over time become fundable. I think one of the biggest challenges that most VCs or investors sort of, go through are finding entrepreneurs that actually have fundamental businesses or have the capacity to grow in the way you want them to grow. So our whole thought process within the Tech Hub is to develop programs to amplify and accelerate their journey and growth from a sustainability standpoint and drive the impact that they actually set out to achieve more from a digital standpoint. So our whole focus is, again, digital tech oriented. And over the next couple of months, you'll see a lot of programs where we will be reaching out to you as well in terms of participating, because we'll be identifying cohorts of various startups and just helping them in terms of building more capacity for themselves and addressing the gaps that they're trying to fill. So great. I would like to move on to the next segment of the session where I'll be asking you guys a few questions. Most of these questions have come from entrepreneurs in the industry, so they're hands-on ground floor questions. I'd like to ask this question to maybe Sri Krishna to start off with, and then I'll bounce it off to somebody else. But the question is, do you think the pandemic has drastically changed your investment thesis? If yes, then how?
Sure. So I think a few things played out with us. One, quick realization that the companies that were, and obviously all of the companies in the portfolio took a hit in various forms. So a lot of our initial focus was really just making sure that we're helping our founders in whatever way we can, while then starting to think of how does all of this impact fund strategy for ourselves. I think we've historically not done as much consumer facing. I think it's just not as much in our DNA. We're much more on the B2B side. So not necessarily seeing as much impact, unlike sectors, say travel or some of these other sectors which have been far more impacted by the pandemic. But in terms of just our own investing thesis and just our own thought process, I wouldn't say it's obviously it is a changed world for all of us. I think it'd be one would be lying if we were to say it's all business as usual. I just think that the levels of change and how drastic or perhaps less so, or where is one on the spectrum, I think all of that is fairly it's different for different people. So for us in particular, I think clearly realizing that in hindsight, maybe not doing as much on the consumer side has stood us in good stead, and we're continuing to look more. We've traditionally looked at sectors like ed tech and ed tech evolving more into job tech, sort of as a core to the theme that we focus on, and increasingly realizing that in an area in a situation like this, those are two sectors that at some level need investment capital, because while it has been impacted, you're seeing bounce back, and you're seeing that there's all the more need now for solutions that are solving the jobs challenge in India in particular. And I think statistics like the fact that only 25-26% of India's college graduates, for example, are actually employable, and challenges like that are going to get compounded even more so at this point in time, right? Or you take logistics as a sector, for example, where we've had we do have a couple of investments in that space. We're seeing that there is an ability to bounce back while post lockdown, and you're seeing companies come back at this point in time. Similarly, platform approaches, again, we've made a few bets in that space. So I think our sort of a direct answer to your question is, I wouldn't say there's been a drastic impact. There definitely has been significant impact, but what it's made us think through more is really go deeper into the sectors that we're currently in and try and understand, hey, how do we look for, how can problems in these sectors get solved more creatively or differently, or what are other opportunities that are waiting for a solution. Similarly with financial services as well, seeing all the more that historically the demand for credit has far exceeded supply. And in a time like this where you've seen moratorium, but that once things bounce back, there's just going to be even more increased demand for credit. So how does that tie in then into the investing thesis, and how do we want to respond and react to situations like that? I think those are really, I'd say, things that have sort of shaped our thinking over the past few months, and I think will continue to influence our thinking going forward as well, AJ.
Awesome. Thank you so much, Sri, for that. Deepika, I would like to hear from you as well, because you've got a platform per se, right? So I'd like to understand, maybe for the audience sake, how your platform's set up. If someone was to come to you as well, pre-COVID, post-COVID, has there been a difference or a shift in that as well?
So platform is set up to be sector agnostic. We do initial checks, and then post that is where we take these startups to our set of investors. We expected the COVID to have a deep impact with the entire early stage itself, and we did try to make a few changes over there. But surprisingly, there has not been as much of a negative impact that we have seen. So basically, the startups that have come to us or our portfolio has lied either in the COVID positive, COVID neutral, or the COVID negative space. And when I say COVID positive, as those businesses where COVID has impacted these companies more positively. And we have seen quite a few of those companies that have been COVID positive and COVID neutral. It's just that the check sizes, of course, into these companies has reduced significantly. But nonetheless, there are startups which are still coming to us. Investors are still open to looking at these COVID positive deals, and commitments are still happening, and investors are still placing bets. A few sectors that have done really well on our platform, some have not done so great as well. EduTech being one of it, SaaS based being another. And in the fintech also, we have seen spaces more than lending, but in terms of healthcare, insurance based, and mutual funds based, where our portfolio has done some good investments over there.
Excellent. Thank you so much. I think we'll move on to the next question, and I'll pass this question on to Vineet and Naganand as well. So given that the COVID-19 pandemic has changed how startups and investors look at the market, now in this new normal, which sectors would you place your bets on? So I'll open it up to Vineet first, and then we can go to Naganand.
Oh, okay. Thank you so much. I thought my V is going to put me at the bottom of the roll call again, but I got lucky, I guess. Thanks, Anmo. Yeah, no, I was fully prepared. I'm like, man, it's been on from school and it's not stopping even now, So thanks. So yeah, we actually at Orias have a very clear visibility on the sectors that we want to look at, and we believe a lot of people here will have different versions of the same thing, because everyone's seeing it from the same lens, which is living through it and figuring out what happens after it, right? We feel that a couple of things have turned out to be very valuable in this time, and that is the fact that we had a diversified portfolio within consumer. So which means we are not just seeing what news tells us, right? All respect to your story, but we are actually seeing what our own portfolio is telling us, right? And some companies have been impacted negatively, some have not. And the sectors that we now think are going to do very well. Number one, as VCs, we have always bet on tech. We are either techies or we believe in tech. So honestly, anything with tech is going to probably do very well, right? Even in a sector as today downtrodden as travel tech is still going to do better than non-tech travel, right? Having said that, anything that's got to do with essential products, medical or health, online only businesses. What I mean by online only businesses, customer acquisition is online, customer delivery is online, everything's online, right? You're talking media, gaming, stock trading, communication, whatever. There is a significant chunk of offline. So number 4, what we call online to offline businesses, where your customer acquisition, customer service, customer retention, customer feedback, payments is all online, but the end product is actually delivered offline, right? It could be e-commerce, it could be subscription commerce, it could be delivery, or it could be something as simple as a direct to consumer brand, right? Because that's a D2C, but at the same time, I believe it's online to offline. You're no more dependent on distributors and wholesalers and the retail kirana stores. And lastly, any SaaS that supports items 1 through 4 that I went through is going to be excellent, because these startups are tech first, which means they will be not only the early adopters, they'll be the big users of this SaaS. So that's our take on it. And Nagan, I'm sorry if I haven't left anything for you, but
no, this is brilliant. The reason why I actually had you go first is because you have the B2C lens, and now we're going to go to the B2B lens.
We'll always figure something out, Vineet. Not a problem. No, so I think to add to what Sri Krishna and what Vineet, all of them have said, I think one thing COVID has done, it has accelerated the pace of digitization to a large extent, right? Digitization was a process that was going on. We have all been hearing about it for the past 5-10 years, but I think this has completely accelerated it, right? So who would have thought that all the call center people will have to work from home, but have access to all the systems that they used to have when they were sitting at work, right? I mean, that was never the case. You always thought all these guys, we cannot access anything from home. We have to access everything from work. Now, what has this done? It has thrown a wrench into everything, saying, look, guys, you're going to be working from home, but hey, lo and behold, you have to have access to all the systems that you used to have at work. I think that has turned all the world upside down, right? Like, when you look at ISO 27001 and all those various things that you had, one thing they always used to say is, I have a disaster recovery, but no one said entire world closed down. How are you going to still function? I think that's a big challenge that COVID has thrown, where you're saying everything is shut down. You're not going to come to office, but hey, by the way, you still need to support customers. We still need to make business, run the businesses. We still need to have access to systems. I think that's a huge opportunity across sectors, whether it's education, enterprise, infrastructure, health, agri. It doesn't matter which. I think it's just the phenomenal acceleration in digitization is going to open up opportunity, I'm sure, in every single segment. I think I think next 3-4 years will be a different world in terms of opportunities. So whoever can recognize those and work on those, there'll be enough and more for everybody. I think we are in very interesting time, because never before could you have provided such a platform for experimentation, right? If you go tell somebody, let's close everything down and figure out what happens, they'll say, are you crazy? Now, COVID forced you to do that. So suddenly you have a new way of experimenting with things. And this is very interesting, from a product perspective. Of course, very painful from what suffering people are going through and things like that. But from opportunities from a product perspective, I think, it's a very, very interesting phase.
Excellent. I think, Vineet, did you want to add something?
Yeah, no, Nagan brought out an excellent point, just a sentence, right? I mean, and we are also very lucky that in such a shocking scenario where, things have changed so fast, we are in an industry where that is table stakes, right? For you to be an entrepreneur and a founder, it's table stakes to be able to manage extremely radical change in extremely, sudden and short bursts of time. So we are very sort of, compared to a lot of other industries that are still figuring it out in October, we luckily were dealing with founders and entrepreneurs who, that's a pre-qualification criteria to be a founder, right? So thank God for that.
Absolutely. I think this pandemic has definitely accelerated the tech adoption across and the importance of digital transformation in pretty much all sectors, right? So this question's off to Ravi. Given that we're seeing a lot of uprise in traction with respect to ed tech, online business, e-commerce, SaaS as well, right? As a result of this, we're seeing a lot of new companies pop up in this sector as well. Do you believe that each of these sectors still has space for plenty of new players? Or is there a fear of saturation and copycats?
Sure, I think that's a very good question, Anubhav. And look, I think every investment, especially the venture capital investment, goes up in cycles. I think the edtech is on an up cycle right now, with a lot of capital. First of all, I think most of the capital is going to what we call edtech, an academy. and Vedantu, but then a lot of capital is going in tech. So I think, and this will probably peak both from investments and M&A over the next 5-6 months. Maybe we think sometime early March, April of next year. And I think that's when it's probably the peak at that time. Then that's when 2-3 things will happen. One, the euphoria around edtech will start to wane away because, like you said, enormous amounts of investments have gone there. I think post that we expect some pain because obviously the high quality companies will separate from the mediocre companies, right? So we think that's definitely going to happen on the edtech space. In general, I think overall investments, while some of these sectors have seen a lot, overall the investments have gone down, right? Which means that should start to come up sometime next year from a VC investment cyclical perspective, right? And for instance, even in edtech, right? I always think of this. For example, if you look at the sort of government exams, which is a state government exam space, where an equal number of students apply for state government exams compared to central government exams, dynamics are dramatically different. I think that's an open opportunity, and there aren't a lot of companies out there. So there are pockets, there are niches within each of these segments, which and definitely, I think copycats, some pain from for investors, founders, all expected to happen as part of a general life cycle.
Excellent. Thank you so much, Ravi. Maybe a deeper insight I would like from you guys as VCs and potential investors. How do you actually weed out the copycats, and like if someone were to come to you, like what are some of these, like the top 2-3 things that you guys would kind of look out for from a copycat standpoint? And happy to ask Naganand or any other panel member as well.
Yeah, so copycat, I think, you have to do your homework and you need to know what's in the market. And that's why, and as a VC, you will not know everything, right? I mean, we are quite clear that you'll not, we invest in so many different startups, so many different founders, so many different markets, so many different verticals. It's almost impossible to know it's a copycat or not. But that's why you always talk to prospective customers, you do your market research and you do your competitive analysis and you talk to people who you trust in that particular domain to see what is happening. And you gather as much intelligence as you can to make sure that it is definitely there will be competition, but it can't be a copycat or it can't be there are already 15 different companies that are already extremely well funded, and you don't see a large differentiator in what you're doing. And you tell that to the entrepreneur, saying, "Look, this is what we are finding. You please go back and relook at what you're doing, see if it makes sense. This is our input. We will not be able to invest because of ABC, but it's your call. At the end of the day, entrepreneurs are the kings and they know what they are doing, and we are nobody to say either do this or do that. Or all we can say is this is what our research is throwing out. This is FYI, you do what you want." But I think we have to be comfortable in the calls that we make, and that is basically based on our understanding of the market and talking to fellow VCs as well, right? Saying, all right, because very rarely you do a deal all by yourself. You're always trying to work with somebody else, and hence collective intelligence always helps. So you have to have a mechanism to weed out and do a proper research of all these aspects before you make an investment call.
Perfect. Thank you so much. And as you were talking a little bit about that, I was just thinking about, Let's Ventures as well, given that you probably have a lot of volume pushed your way in terms of, new applicants from founders. How do you have this mechanism of weeding out, copycats or ideas that may not be the right ones for you?
So with regard to copycats, yes, there's always going to be competition in the space. There is a fine, thin line in terms of how one company is different towards the other. So of course, obviously looking at the competitive advantage and the moat that the business has. But also we've noticed that it does come down to the execution that the founders have. So Let's Venture always backs the founders first in how much they know about the space, their expertise, their background and things like that. And also with the execution that they are bringing onto the business. The third thing that we also look about is the financials and what their story has to be told till now. So those are the 3 things that we, I think, look at.
Excellent. Thank you so much. I'll move on to the next question now. How do you see cross-border investment trends pan out in the new normal? And how can you see India and the UK benefiting from each other in this regard? Anyone specifically would like to address this question? Ravi, maybe if you want to just start off and we can open it up again.
No, I think this is a great question again, because I think we are already starting to see a lot of VCs across the globe starting to invest in Indian startups. Some of them have very clear strategy with teams in India. Some of them are still operating remotely. But if you look at the global perspective, US, of course, China, but it's a tough market to break into. You need very specific skills. UK, India, and then perhaps Singapore, right? So India is obviously a huge market in terms of early stage tech VC ecosystem. And what I would love to see is a lot more European and UK investors investing in Indian startups. Because if I think about it, right, a startup in the UK who's perhaps raised a Series A or a Series B, if they want to expand, what are their sort of options, right? They go to the US, but US is incredibly competitive. China is a tough market to enter, which means that India is probably the next massive English-speaking horizon for them, which for them a lot of history between the countries. So I think it's a great opportunity. And as VCs, I think we all of us should facilitate a lot of that happening, not just from UK to India, but India to UK as well.
Excellent. And just maybe diving deeper into what you just shared, Ravi, would you be interested, like as a VC in general, to start dialogues with UK VCs that may want to expand into the Indian region and may not have local presence? Like, is that something that at a fund level you guys would be interested in?
Yeah, absolutely. Because I think there are a lot of synergies, right? Because one of the things that we have realized as we talk to global VCs is a lot of this tech is actually portable across several borders. Of course, some areas have more specialization, which means that the issues are the same, issues around scale, capital formation, team. So absolutely, I think it would be a great opportunity to collaborate with VCs in the UK to see what can be done together.
Excellent. Excellent. Thank you so much for that input and insight as well. My next question is, while India has built a few remarkable global products, the need for more scalable innovation remains. What do you think Indian innovators need to build for the world? So this is like literally, giving insights into tomorrow's entrepreneurs that if you build a product like this, you're definitely seeing a potential unicorn in the making. So maybe Naganand, if you want to take this question again, what sort of innovations do you think Indian upcoming entrepreneurs should kind of be taking to the world? Any inputs from your side, from the B2B side?
So I mean, it's hard to say what kind of innovations, because it depends on many different things, including what the entrepreneurs are capable of doing, right? Because you got to start from there. But over the past 5 years, we have seen 25 plus unicorns, right? So we have shown the world that we are capable and competent, and out of which, happy to say about half of them actually are coming from the B2B sector, which is very surprising, right? You would not have thought India would be capable of building B2B unicorns, but lo and behold, we have done that. Whether it is Dhruva or most recently Postman or a few other examples that we have, Freshworks, Zoho. So I think we have made a fabulous progress in that. And like I said, I don't want to predict what areas to focus on. It can happen anywhere, as long as you identify a problem that the world needs to be solved, and we are capable. I think it's great, but it won't be deep science yet, because that if there's one place where we definitely need to improve is in that area where it is very deep tech or deep science, because we still don't have that inbuilt in us. There's still a lot of investment that will be required from the government and from various players in that space. But otherwise, in the general product innovation space, I think there'll be ample opportunities for us to build great companies. And unicorn is an overused word, and but we will build great companies. I'm very confident of that.
Thank you so much. Sri, any inputs from you on this?
I think it also comes down fundamentally to sort of ability to execute on some of these things, right? And I find that that's also playing a key role in just ability to scale the innovation. I think a lot of times what we've also ended up seeing sometimes is that innovations are sort of happening in a silo, and you're not necessarily you assume there's an innovation, but once you take it out to market, get more and more feedback, you see that it seemed like a great innovation, but perhaps if there aren't as many willing takers for this, then there's really not much point. And also a lot of times inability to scale this simply because it's not being positioned in a way that perhaps it needs to be, or can be in a way that's just more palatable, and hence and because of that being able to scale. And I think fundamentally just going back to your to the previous point as well, in terms of copycat versus not, A lot of times I find that ultimately it just is really coming down to execution, and that's really the only moat. Because a lot of problems that one is trying to solve for in India, at least, you don't need to be in a winner takes all kind of situation. You could actually have multiple players offering the same or solving the same problem, maybe slightly different approaches. Does that necessarily mean that they're a copycat? I'd say no. I think if ultimately if someone's able to execute better than someone else, one does stand a better chance even with just the same idea.
Excellent. Thank you so much, Sri. Vineet, do you see any innovations that haven't really like entered the market and you think that are ready for the Indian market and people haven't really pounced on it yet?
AJ, that's a great question, but I gotta say, right, and maybe other VCs here, including people not here, may not agree with me, but you got to understand, the VCs are the ones that can, at best, identify patterns early. They aren't the ones that can create the pattern, right? So I'm sorry, it sounds like a cop out, but it's not. If believe me, I've had 3 startups under my belt before I became a VC. So yes, but for that you have to be a founder first, right? You can't be a VC first. Having said that, sure. One thing that VCs do, and a lot of founders don't know it. I didn't know it when I was a founder. We always thought that the VC's job is to evaluate a pitch deck, and pitch deck sundar hai, to bhai, you'll get a check, right? And sorry, I was one of those dumb founders in my 20s, but now I'm not. Not in my 20s, I mean. So one of the things that matters over here is that VCs do a lot of analysis from 30,000 feet, which unfortunately founders never can do, right? Because when you're a founder, you're so deep in your own troubles of your own subsector, your own, customers, that you don't have the bandwidth to go 30,000 feet. The rare founders who can, kudos to them, right? So yeah, founders should actually continue having conversations with VCs even when they don't need the money related. That doesn't need to happen, right? The founders will learn a lot. The VCs will learn a lot. The VCs don't have the detailed hands-on view that a founder has, and a founder is too busy to have a 30,000 view on so many sectors that may cross-pollinate. So that would be the closest answer I could give you.
Awesome. I personally have this belief that I want to do what I do best and partner with those who do what they do better. So I think that's the whole VC philosophy, that look, we're here to back the right ideas and back the right founders and take that journey with them over time, right? I think that's the whole thought process. So thank you so much for sharing and being authentic with that answer. Thank you so much. This is the last Q&A that I'm going to sort of open up more as a general question that most founders have, but it's more around investment trends show that the market has become very cautious now. I'd really like to know, in this scenario, what can an early stage startup do to attract an investor? I think there's so many people that have lost their jobs recently due to the pandemic, right? And a lot of them have evaluated their options, and a lot of them are getting into, again, entrepreneurship. If you were to put yourself in their shoes, right, what would be those maybe 1 or 2, 3 things you can kind of suggest to them that would allow them to attract the right set of investors for themselves? And this goes to, maybe I can open it up to Deepika first, because we'll go from you and then anyone else can contribute and pitch in.
So anybody, I think, looking to be a founder and trying to attract investments at these times or any time, the first thing that they need to have is fire in the eye, fire in the belly, and you will attract the right set of investors, whether it be strategic or just for a financial point of view.
Awesome. Thank you so much. Ravi, if someone has to catch your eye, what would the 3 things be?
Look, I think there's never a bad time to start up, right? And if you have the passion and the vision, then pandemic and no pandemic, right, you will start. And I think that's the reality for most founders. Look, I think if there's always a high quality founder, because at the stage that I guess most of us come in, the market opportunity needs to exist, but it pretty much begins and ends with the founder. So if the founder has the right abilities, the right vision, an ability to articulate why this product at this point makes sense, perhaps an unfair advantage, a large opportunity cost, I don't see a reason why he will not be funded. Right now, of course, today if you say I'm going to start a travel tech company, perhaps a wrong time, but in general, right? I think most founders are very sharp. They know what works and what doesn't work. I think it's more to do with those things than a pandemic, to be honest. Because
Awesome.
even now you see, right, high quality founders are getting funded. It hasn't stopped.
So I guess clarity and focus, right? That's what would kind of catch your eye. Naganand, what would be 2-3 things that you would suggest a potential founder to kind of stand out and say, this is where I am, I want funding from you? Like what would those 3 things be?
Actually, it does not change, right? The COVID situation put a temporary pause for 3 months, right? And I would not say anything has changed, because as soon as this whole world stopped, everybody had to stop, take stock of the situation, and understand what it means to businesses, what does it take for us to survive this, and so on and so forth. But post that, it's all in terms of early stage funding, nothing has changed. So I would not say anything has changed. Things continue, and the entrepreneur spirit, their ability to track what the market changes are, and then hence come and pitch the right idea to you. I think all the fundamental things continue to be the same, and nothing has changed. Like I said, opportunities have opened up. If someone came and told me, look, I'm for all the insurance company now, I suddenly enable all their people to work from home and have access to everything, then I would love that idea, because I know it would have happened at some point of time, but the inertia for that change would have been really, really hard, because people would be very skeptical. But now this has enabled it. So if at all anything has changed, is the ability of the entrepreneur to cite the opportunities that has evolved out of it, and then constructively present it to the investors. But the fundamentals of what the entrepreneur should present, I think it still remains the same. So
excellent. Thank you so much. Vineet, we'll come to you next. We're not going to keep you last this time. Don't worry.
Thanks, AJ. One of the things that I'd like to tell founders is, and a lot of people today have a problem with extremely large monopolistic companies. I'll name some of my favorites, right? Microsoft back in the day, Google today, whatever, right? But you got to understand, the end game of starting up is to have an extremely large monopolistic business, right? That has not changed. Now, there are certain sectors where you may today think that it will not work, but all that means is the process and the approach may need to change, right? There are certain things that will happen a little bit later. So I'm giving a vague answer because other than maybe 1 or 2 sectors that have died out, it's like, about 110 years ago, there was a sector called, horse carriage driver. That sector dried out thanks to Ford's Model T, innovation. So if the sectors dried out, that's normal disruption. Pandemic or not, that would have dried out. It maybe just dried out 16 or 24 months earlier, or maybe 2 years, 5 years earlier. Having said that, I would have to agree. The founders are the smarter ones here, and they have to experiment and they have to learn from their customers. What customer habits have changed. A lot of customer habits have changed. I'll give you a personal anecdote. While my company pays for the company Zoom account, I have a personal Zoom account. I don't pay for it because the free version is sufficient. But you won't believe, my mom came up to me and be like, beta, how do I pay for my Zoom account? I can't live. So my mom paid 1 full year Zoom subscription in advance, right? And I'm just like, wow, if Zoom had ever spoken to me, I'd be like, no, this free plan is perfect for me. But the same Zoom had spoken to someone like my mom, who's not a techie. She'll be like, of course I want to pay. How do I pay? Why don't you make it easier so I don't have to tell my son to make the payment? Right? So that's a personal anecdote, but that should tell founders, go talk to your customers, and your customers may have changed. Who you thought were your customers may not be.
Yeah, no, brilliant advice, Vineet. Sri, what would be the 3 points that would get a founder to stand out for you?
I think a lot of times a customer is a better investor than a VC, right? So if you can demonstrate that there's actually someone willing to pay for the product or the service that you have, I find that that's just typically a better. It's just a better selling pitch to to an investor like ourselves. I think the other part is which again just hasn't changed, but maybe it's causing people to look more deeply and care about is unit economics. Previously, maybe you could get by with not necessarily having it as strong, but I think it's brought all of that really into focus, and you're building businesses fundamentally for that reason, and not to actually not becoming an entrepreneur in order to raise money. I feel like we've been through that phase where a lot of times it's cool to be an entrepreneur, and the focus of building the business, or the focus of becoming the business rather, is to go raise money, which is really a flawed notion, right? And you're building you're doing a business, or you're becoming an entrepreneur because you're seeing that there's a large problem waiting to be solved. And I think some of those things really haven't changed, but perhaps has caused a bit, this whole, these past few months have probably brought about a refocus in some of that thinking, which I think is the right way to go.
Awesome. Thank you so much. Keeping in mind we have like about 5 minutes left, I would really like you guys to dig deep for this last question. And this last question is about, I would like you to go back into your investment portfolios that you've invested in over how many years, okay? And pull out like one of those startups that you'd like to talk about in like 30, 40 seconds and tell us about what really excited you from a progress standpoint or an innovation standpoint or a product standpoint. So it's literally going back memory lane and pulling this out. So any rabbits in the hat? So we'll start off with maybe Sri and we'll go backwards in the same way.
Sure. I think it's tough to make an investor pick, their favorite child from all their children, sort of thing, I guess. But
sorry, we've
the one that comes top of mind right now is also Better Place. Better Place has today become India's largest human capital management platform for blue collar workers. It's a segment that we care about very deeply, the mass entry level worker, blue collar worker, and to be able to actually have a platform that builds trust profiles for these workers and enables these workers now to access other products and services like credit, like access to skilling, access to a better job. I think is fundamentally has caused a sea change in the way one looks at the blue collar worker. So to us, that stands out, and also because it was an investment that we made from our first fund, and they've demonstrated great progress. We've actually invested from our second fund as well. So you usually like those kind of startups, and those tend to stand out for us. So that really would be the one that I'd pick, which is Better Place.
Awesome, thank you so much, Vineet. From your bag of investments.
AJ, like Sri said, right? It actually is easier to tell you publicly who is my favorite child. It's not easy to tell you which is a favorite, portfolio company, right? Because the children I can later on handle at home, right? So, having said that, yes, there is one startup with which luckily I've had some opportunity to work closely. It's the most startup-like startup that we've ever had. It's a company called Country Delight. They sell milk in packets. For those of us in Bangalore, it's the equivalent of the Nandini milk. For people in Delhi, it's the equivalent of your Mother Dairy or whatever, right? And it's unbelievable what they have been able to do as a D2C brand in an industry that is as old as the invention of agriculture, right? Milking cows. So to me, that is the clearest sign why it stands out, because they have not taken some new innovation and jumped on it or whatever. I mean, they have taken what existed. I mean, they've not even innovated on the packaging, right? They're not even saying we'll change the packaging. They're saying we'll take exactly what you get. We'll just deliver it to you differently. We'll deliver it to you even at the same price, but we'll give you a better product inside. So for me, Country Delight is, they are in Bangalore. I use them all the time. And the first time I had them, I just met the founders when I joined Orias, and I hadn't known them. And I was, they gave me a sample. I was like, what flavor is this, right? And they're like, really, you fool. This is plain milk. We didn't even add sugar. So that's me coming from Bangalore and having tasteless milk all my life.
Oh, brilliant.
That's for me.
Thank you so much for sharing, Vineet. Ravi, what would be one of your favorites?
No, sure. I think tough one, but I'll pick Business. Business is a B2B e-commerce platform connecting, starting with the footwear sector, where they connect manufacturers in Agra, in Delhi, footwear manufacturers, all the way to retailers across 10,000 different locations across the country. Massive disaggregated space, both on the supply side, on the buyer side. But the founders were incredible, right? Real sons of the soil, come from families who have run footwear businesses, wholesale businesses, understand the ins and the dhanda type of guys, super sharp. One of the companies that have seen the most data their MIS is so complicated that I stopped seeing after a few sheets. But great company, have scaled incredibly well, have raised funding, are now exceeding what their pre-COVID levels were. So I would pick those.
Nice. Awesome. Thank you so much. Naganand, from your portfolio.
My favorite with the first investment. So that way it is simple, right? So my first investment was Laval Network. So these guys with very strong networking background, and they build forwarding plane in the cloud, a cloud first networking company. And SD-WAN, as you know, is a fairly hot space, a lot of acquisitions. Hoping that these guys will be able to make a big difference. And they're beating the large MNCs in India and gotten great customers. So really looking forward to how they can scale further.
Well, all the best with that company specifically. Deepika, lucky last. We've got like literally a couple of seconds left, so over to you.
Yes. So, like the other said, very difficult to pick a favorite one, especially when we've done 225 rounds. But yes, we've had some really good names in our portfolio, like MyUpchar, Little Black Book, Daily Ninja. But I can tell you what our investors do go for. They really like companies that are very much tech in advance. So we did AirMeet. We also had Agnikul, which is an Indian space tech company that the investors completely liked, and it oversubscribed. Or things that are making lives easier for the Indian citizens itself. Startups that are having a global approach or giving direct competition to companies like Zoom is where the investors are going for.
Awesome. Thank you so much. With that, I would like to thank all of you guys for sharing your amazing perspectives, and I'm sure the participants tuning in would have had an amazing time listening to all of you. I would like to personally thank you for your time and look forward to connecting with you in person as well when the pandemic sort of gets better. Thank you.
Thanks.
And take care and stay safe.
Thanks everyone, and great questions, Anubhav.
Thank you.
Thanks, guys, on the panel, and thanks, Your Story, for setting us up.